Hey, welcome back to the podcast. Thank you very much for being here. I want to talk about a conversation that I just had this week when someone was looking into farming without the bank, starting infinite banking into their farming operation. And they said, but I'm doing infinite banking already, but I'm using my investments. So I'm already doing it. So why is this different? Like, how is this going to benefit me more and how's the process different? So first of all, if you're using your investments to mimic what is done through infinite banking, no, you're not already doing infinite banking. Infinite banking is about liquidity, control, and guarantees. And so the infinite banking concept is a mindset. It is a financial philosophy that you adopt. The vehicle that we use to implement the concept is a dividend-paying whole life insurance contract. We choose to work with a mutual company. We like them the best. We like their policies. We like working with them. So whenever you start infinite banking and you get your properly structured insurance policy, it is so crucial that your policy is structured properly. And in order to get a properly structured policy, you need to work with an authorized practitioner through the Nelson Nash Institute. If they are not an authorized practitioner that is listed on the Nelson Nash Institute website, you need to do your due diligence and find someone who is. So how is infinite banking different than just applying the same principles but using your investments? So first off is the life insurance policy. It's a permanent policy that carries a death benefit. It carries a guaranteed death benefit. You have liquid access to your money. You are eventually going to get access to the premiums that you've paid in. Your dividend, we can show you on the illustration where your dividend, although dividends are not guaranteed, they've been paid over a century. So we focus on your non-guaranteed sides because the company that we work with, they have had a participating policy since 1936, and they have paid a dividend every year since they introduced the participating policy. And so let's talk about, okay, if you're using your TFSA account, for example, to access your money, use it in your operation for whatever it might be, operating expenses, buying inputs, maybe you're purchasing cattle. Can you withdraw your money out of there? Absolutely. Okay, so it's liquid to you. So you take it out. Your growth in your tax-free savings account after that withdrawal is now on the remaining balance that's in that account. And you don't have a death benefit associated with it. So those are two things. When you have a participating whole life policy and you are implementing infinite banking, first and foremost, you have that death benefit. I have talked to too many clients that have had death benefits come to them when an unexpected family member passes, when there's an unexpected death. I've had clients who have no death benefit, no life insurance policy when an unexpected death occurs. We're not immune to unexpected things happening. So first of all, we have the death benefit. We have access to our money. If we're contributing the full premium of our policy, if you already have a policy or you're reading the book, you know that there's a deposit option payment that you can make. You're going to get 90% access to those funds. You're eventually going to get access to every single dollar you've ever paid in. And let's say we take out a $10,000 loan from our policy for operating expenses. Our money continues to grow and earn compound interest on the balance that was in there previous to that policy loan, not on the remaining balance. And lots of people will say, why? How is that even possible? We've never heard of that. It has to be a scam. It's because when you take out a policy loan, you are not taking a loan from your money. The insurance company is loaning you their money. Your money stays in the policy to continue growing. So there's two distinct differences on why, if you're using your investments, no, you're not doing infinite banking. Why is it different? The main thing, death benefit, and your money continues to grow on the balance that you had in there. And you control it. You own the policy, you control the policy. You are now the banker. Your TFSA account is controlled by the government. So there's some distinct differences. And I just made some notes here. It's my understanding your liquidity and your TFSA can also depend on what investments are there. So I just wanted to address that because if we've never been shown a different way, then yes, the way that we're doing it, like this particular person, if they're accessing and they're kind of doing the same principles of IBC, but they're doing it with their TFSAs, yes, maybe it is working for them and that's great. But how could we make it work better is the question. How could we create something that you get more bang for your buck? You're going to get death benefit for pennies on the dollar. You're going to get that generational wealth piece that's going to start flowing to your beneficiaries upon death. There's just so many things. If you have our book, chapter 13 starts talking about case studies. And we start off with Dawn and Anita. They're a couple who are running their farm. And they start implementing infinite banking because they are borrowing $500,000 a year from the bank for operating. And we show how every year when they pay premium, we reduce the amount that they need to borrow from the bank little by little every year. And then Dawn and Anita have a son. He comes back to the operation. What does that look like? Then their son gets married. Okay, now we need a policy on wife. Then they have a kid. Okay, so Dawn and Anita need a policy on their granddaughter. And do they need it? Everybody, like every person, is an opportunity for a policy. And a policy is another banking system. It's another place to store and grow our money so that we can become less reliant on outside lenders. And then what happens when, after the granddaughter comes along? Now what? Well, Dawn and Anita want to start slowing down. They don't want to work full time on the operation. So then what happens? Well, Dawn and Anita aren't dead. Like mom and dad didn't die. Like they still need to live. Maybe they want to travel. Maybe they want to be snowbirds. Maybe they don't want to be snowbirds. Maybe they just still need an annual income. And we show that in case study 4, where Dawn and Anita use their policy to supplement their retirement income. I could go on and on and on about how this is better and how it will work better for you than using your investments to practice infinite banking. And here's the thing that I also said to this person, the tax-free savings account that he was using, like in the investments, they're subject to the market. Policies have a guaranteed rate of the general fund of the life insurance company. So there are guaranteed values. There are not guaranteed rates in the market. And so it's kind of like if I start a weight loss journey and I lose 10 pounds and then I fall off track and I gain some weight, okay, but then I get back to I've lost 10 pounds. I didn't really get back on track because if I would have stayed on track, I would have probably lost 20 pounds by now. It's the same when we compare the market versus a whole life policy. We have a guaranteed growth. Our cash grows uninterrupted in a policy. It does not grow uninterrupted in the market. And if you've ever had the opportunity to sit with Mary Jo when she brings out her fancy calculators and shows the market comparison to a policy, it's mind-blowing. So I encourage you just to think outside of the box. Like if you're listening to this podcast, you've already started to think out of the box. So I commend you for that. Take a step further. Read the book. Ask us why and how can this be better than what I'm already doing? What if you're operating on cash? What if you're not even using investments to practice the principles of the infinite banking concept? What if you're operating on cash? So then the question becomes, what is the lost opportunity? on that cash. And some people start to scratch their head like, well, what do you mean? If we have an operation who is funding all of their operating expenses with cash, what could it look like and what could we build if we start running that cash through a policy? Who do we need death benefit on? And how much of that cash can we justify running through a policy to make the situation better, to build something other than just operating on cash? Yes, when we're operating on cash, we're not paying interest to the bank. That's great. But what opportunity are we losing? Because we could be earning interest. And Nelson, one of his famous quotes is, we finance everything we buy. We either pay interest to the bank or we earn interest. Okay, we're not paying interest to the bank because we're operating on cash, but how can we earn interest on that money? And how can we earn it uninterrupted? So if you don't have Nelson's book, Becoming Your Own Banker, I highly recommend that book too, because once you've read one of the books, you're going to want the other one. And so how can what you're doing be optimized? How can we improve what you're doing? If you're operating on cash or you're using your investments that are liquid to you, how can we make it better? What can you get over and above what you're already doing for the same dollars that you're already using? And so highly encourage you, get the book. It starts there. By the time you get to the end of the book, you're going to know whether this concept resonates with you and whether you want to look further into it. And so head over to Apple, Spotify, iHeartRadio. That's where you can find our podcast. Leave us a 5-star review. We would really, really appreciate it. If you like watching podcasts, you can watch us on YouTube. So we are under the Win A podcast or the Ranch Your Way show. You know what to do. The next step is purchasing the book. So head over to our website, ranchyourway.com. That's where you're going to find the book bundle. You're going to get the paperback book plus the audio. The audio book has been a game changer because maybe you're a couple. Okay, one can read the book, one can listen to the audio. So have a great week, guys. Thanks for tuning in.
So glad you leaned in with us on the Win A podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.